Fear factor, what traders are watching for as the stock market takes a bad turn. In today's cover story, the CEO of Microsoft makes a controversial comment. Plus, could Amazon's latest reported experiment revolutionize retail? And taking advice from the pros, a guide to talking to your financial advisor. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, I'm Angela Miles. It's Monday, October 13th. In today's first look, the stock market swings. A roller coaster ride last week wiped out gains in the Dow, leaving the blue chips negative for the year. The rest of the market also took a dip. The Nasdaq was clipped by 102 points, while the S&P is trading at 1906, just 1 point above its next crucial support level of 1905. Gold lost $2 and oil 23 cents. Sears Holdings says Kmart stores were hit by a hack attack. The data breach compromised some shoppers' debit and credit card information. The retailer is working with federal authorities. And Apple supplier GT Advanced Technologies is closing its Sapphire producing plants in Arizona and Massachusetts. The company says close to 900 people will lose jobs. Bankruptcy court documents reported in the Wall Street Journal show GT calling Apple's contracts oppressive and burdensome. GT had hoped its Sapphire would be used in several Apple gadgets. Trader Philip Strabo of RJO Futures will have a very active trading day, no doubt, Philip. Is this a slow-mo correction versus a big one-day washout move?
Well, I mean, this whole last week we saw big moves. We're anticipating that markets still continue to gyrate quite wildly. I mean, we saw multiple 20-day point movements in the S&P. We saw a push back down below the 200-day moving average. The volatility index spiked up over 21. If you don't have that, if you have a slower movement, the volatility index is going to remain lower. But with the spike up over 20, it's jumping on everyone's radar.
It is a holiday. How could that change volumes in the market, and how will that affect stocks?
Well, so on Friday, we saw volume was at double the normal levels. And because of the holiday we're seeing here, you know, on Columbus Day, the volume is going to be much more compressed. Some of the open outcry markets are going to be a little closed. Some of the offices are going to be closed. And a lot of those traders are taking extended weekend stays.
What's your outlook on the bank earnings coming in this week from Citigroup and Wells?
You know, so I'd anticipate that these earnings, they are going to be affected by the dollar index. The dollar was significantly stronger over this past quarter. That tends to weigh into a lot of corporate earnings. Also, with interest rates compressing and remaining at lower levels here, we're probably going to see those earnings come in closer to in line with expectations or a little bit softer levels.
We will be watching. Thank you, Philip. Have a great trading day.
Thank you.
It could be a tricky market for companies IPOing this week. Chuck Coppola steers us in the direction of one new stock.
Angie, the newly merged Fiat Chrysler is rolling onto the New York Stock Exchange. The stock begins trading today on the NYSE and on the Milan Exchange in Italy. The European and U.S. car makers say that it's a new era. Chrysler has rebounded from the financial crisis. Its sales jumped 19% last month. Shares trade under ticker FCA.
Market volatility is causing cloud computing company Box to delay its IPO until January of 2015. But Dave & Buster's IPO is in play. After pricing in at the low end of the range, Dave & Buster's stock bounced 8% higher Friday. The arcade-themed restaurant says it's moving toward paying off its $530 million debt load. This week brings 8 IPOs, including Great Western Bancorp Wednesday, expected to price between $21 and $24 per share, trading under ticker symbol GWB. On Thursday, it's Atara Biotherapeutics. That could price in a range of $14 to $16. The ticker is ATRA. And Friday, it's tech company Zayo Group. It could debut around $21 to $24. The ticker is Zayo.
Blackstone Group is breaking up its businesses. The private equity firm is spinning off the financial advisory arm to combine it with advisory firm PJT Partners. Blackstone's advisory business includes its mergers and acquisitions practice, restructuring services team, and a capital-raising firm named Park Hill. PJT will become public when the merger is completed next year.
Activist investors have a big appetite for wins this year, and the parent company of Olive Garden is the latest to succumb in a board battle. New York hedge fund Starboard, which owns about a 9% slice of Darden Restaurants, pressured the company to change up its board of directors, while the entire board has now been replaced, and it includes 2 representatives from Starboard. Another hedge fund pushed Darden into separating Red Lobster and Olive Garden earlier this year.
A meltdown at Dairy Queen. The ice cream chain reveals a hack attack impacted 400 stores around the nation. It says its systems were breached between August and October. Hacked systems contained customer names along with credit card and debit card information. Dairy Queen will offer free identity repair services to victims.
McDonald's restaurants are facing a flurry of inspections in Russia. The Chicago Tribune reports 170 inspections were initiated just in August, and 9 locations have been temporarily closed for sanitary reasons. The U.S. and European Union have imposed sanctions on Russia. Since then, Moscow has banned a number of food imports and cracked down on McDonald's.
In today's cover story, Microsoft CEO Satya Nadella's advice that good karma comes to women who do not ask for raises raised a lot of eyebrows and concern about what the head of the world's largest software company by revenue really thinks about the gender that comprises only 17% of Microsoft's leadership. Microsoft CEO Satya Nadella's advice to women uncomfortable asking for a raise was, quote, "It's not really about asking for the raise, but knowing and having faith that the system will actually give you the right raises as you go along." Nadella added, not asking for a raise is good karma. The reaction? Far from it.
I would hope that in the position that he is in, that culture is not what's driving the comment.
I'm surprised and a little rocked by the fact that a CEO of this caliber would have those kinds of comments.
What's more, Nadella's statement came at the world's largest gathering of women technologists, the Grace Hopper celebration of women in computing last week in Phoenix, and to a question asked by Maria Klawe, president of Harvey Mudd College, former dean of engineering at Princeton, and a forceful leader for women in tech.
He didn't respect his audience and the reaction that his audience would have. That's a problem for somebody as the head of a very large company.
Sitting back and hoping that the organization will treat you fairly is not necessarily a recipe for success.
A day later, Nadella admitted that he'd answered that question completely wrong. But by then, lively debates had begun in workplaces such as Blue Pearl Consulting, whose CEO suggested these tips to women or anyone seeking a raise.
An employee should position themselves on the same side as the CEO, both working towards the betterment of the company. But the employee should not assume that just because they've done that the CEO knows everything the employee has done. So they need to be prepared to detail some things that the CEO may know and some things that the CEO may not know.
Nadella's gaffe, his first since becoming Microsoft CEO in February, reignites equal pay debates in a variety of economic sectors, especially tech. Women engineers make 89 cents to every dollar men earn. In the legal profession, 71 cents to every dollar. And in finance, 66 cents to every dollar.
Ahead of J.P. Morgan's earnings tomorrow, Jamie Dimon is back and he's upbeat. The bank CEO said at a conference Friday that he thinks innovation from tech companies will keep the economy strong and that spending on cybersecurity will double. Dimon's concerns about the economy losing traction includes non-bank lending, income equality, and hostility toward banks and lenders. Friday's talk was the first public appearance since Dimon was diagnosed with throat cancer in July. He completed treatment last month.
The Ebola outbreak is prompting breakouts in a number of stocks. Shares of hazmat suit maker Lakeland Industries continue to climb. Stock is up more than 188% since the first case of Ebola was reported in the U.S. Alpha Protech, which also makes protective wear, gained 53% Friday. Also, MAP Biopharmaceutical, a tiny private California company, is stepping up production of its experimental Ebola treatment, ZMapp. The treatment was given to several infected patients. Supplies ran out in August.
Turning to the automotive sector, BMW maintains its place as a luxury leader. The car company came in #1 in September due to strong demand in Europe. BMW is on pace to make it 10 straight years as a global luxury sales market leader. Audi came in second, followed by Mercedes-Benz.
A major downshift in Tesla. Investors yanked money out of Tesla Friday, sending the stock down $20. It followed high expectations heading into Tesla's mystery event. The electric car company revealed an all-wheel drive version of its Model S sedan and autonomous driving technology. Kelsey Mays of Cars.com said at a price tag of $120,000, Tesla is still competing with luxury cars. Investors want to see Tesla head toward Main Street.
Investors didn't like the Model S all-wheel drive announcement because they wanted something more. I mean, ultimately, investors will want Tesla to create a car that's going to be much more mass market, much closer to the industry's average transaction price, which we're tracking right now at about $31,000, $32,000.
Mays believes Tesla will come out with a more affordable electric vehicle, but not until closer to the year 2017.
On the earnings calendar for today, it's Care.com and Omnicom. Still to come, signs that traders could be getting nervous about stocks. Plus, behind Amazon's new business blend, why it could be a game changer for retail. And how to talk the talk with your financial advisor. Stick around.
AIG bailout trial is providing a glimpse into the 11th hour decisions made during the financial crisis. The former CEO of AIG is suing the government for how it handled the bailout. He argues that the government took a majority stake in AIG as part of its $184 billion bailout and at what he calls an extortion interest rate. Former Fed Chair Ben Bernanke testified Friday that the Federal Reserve wanted to save the insurance giant from financial collapse, but contends that the government was not trying to punish the company.
Getting the best returns for your money can depend on how you speak to your financial advisor. Here with 5 tips on how to use your words wisely, Stephen G. Blum, author of Negotiating Your Investments, use proven negotiation methods to enrich your financial life. Good to have you here. And your number 1 tip is demand a jargon-free zone.
That's right, Angie. You're in a negotiation with the financial providers, and it's critically important that you understand what they're saying to you. And so insist that they use language that you can truly understand.
Number 2 on your list, ask lots of questions.
Any good negotiator is going to ask lots and lots of different questions, get poised to ask follow-up questions, and pay a lot of attention to all the information they're providing you with.
Number 3 on your list, be an active listener. That is important.
Very important. Pay attention to what they're telling you and its implications. Listen carefully and fully and follow up.
And 4, have your advisor clearly explain how he's making money for you. And I'm sure that people invested with Bernie Madoff wish they would have done this. It's really critical.
It's very important. And as you brought up Madoff, it's really valuable to be sure that you're getting a fair deal and that the arrangement is such that they're actually creating real value for you.
And last on your list, have them tell you how they make their money.
There are a lot of different revenue streams and business models in the financial services industry, and some of them are fairer to the client than others. You want to understand all the different ways that they make money, and you want to be sure that you're getting a fair and equitable deal, and that it's not just an arrangement that makes money at your expense.
Thanks for coming on the show today. The book is Negotiating Your Investments, and the author is Stephen Blum. Have a great day, and thank you.
Thank you, Angie. It was a pleasure.
Coming up, why one trader is waiting for a clue on the chip sector from Intel earnings. Plus, if you thought brick and mortar was dead, Amazon may change your mind. We'll be right back. Amazon releases earnings next week. The CEO, Jeff Bezos, has vowed to move the online retailer forward with new opportunities in the e-commerce space. Jason Moser of The Motley Fool predicts even with the stock trading north of $300, Amazon shares are not overpriced.
It's easy to look at the valuation and say it's overvalued because on a price to earnings metric, on a price to earnings basis, which is typically how the market looks at all companies, it looks expensive. But I don't think that's a fair way to actually look at Amazon.
Although Amazon could face stiffer competition coming from eBay or Google, Moser owns Amazon and intends to hold it as a long-term play. Bill Mueller has more on Amazon's next potential move.
Amazon.com, the virtual epitome of a successful internet company. but it's got the brick-and-mortar universe quaking in its boots. So why in the world would mighty Amazon deign to open up a store, a real retail walk-through-the-door store in Manhattan? Well, it's only a Wall Street Journal report right now, but a lot of people are giving it credence. Rob Enderle is a principal analyst at the Enderle Group in San Jose, California. Rob, are we now to believe that brick-and-mortar is not so passé?
Well, it's certainly appropriate for certain things. There's still a lot of people that like to touch things before they buy them. And if you're selling things like phones and tablets where folks can't really get to them and touch them easily, then it's going to be hard for you to move the volume. Recognize this is one store in a very high traffic area close to Wall Street. So the end result is this is as much about promoting Amazon and its products as it is about setting up retail. In fact, it's more about promoting Amazon and its products and setting up a real retail presence.
Yeah, I mean, touchy-feely, certainly Amazon was aware of that, but its model has been so successful outside of making profits for the company, but as a selling device, it's been so successful. So is there any kind of a retail leverage point it's trying to exploit?
Well, probably like Bridgestone. So, you go to airports and high traffic areas, even though Bridgestone is a catalog company, there are Bridgestone stores that you can go in and order things from the catalog or get things in the store. And recognize since Amazon's launched their one-day delivery program, they can provide an advantage for folks that do want to physically shop. You go and pick the product you want, and then you go home after work and it's waiting for you on your doorstep. That's pretty handy, and there aren't a lot of other stores. In fact, I can't really think of any other stores that will allow you to do that at the moment. So it looks like they're going to experiment to see if a blend of brick and mortar and instant delivery can make a big difference.
Yeah, so there's the word experiment. This may not be something that's going to be duplicated around the country.
Well, I think it's going to depend on how this goes. This is one store in a very high traffic area. This is near where Apple has their most profitable store. So if this one does well, you would expect them to open up other stores in other high traffic areas. But right now, I'm not expecting them to have any more than 20 stores, at least not on the first run. And only if they're incredibly successful would I expect them to expand beyond that. And they might just stop at one.
All right, Rob Enderle, always good to hear your thoughts. Thanks so much.
Pleasure.
Still ahead, the sector that is chipping away at the stock market. Chart Talk is next. Jamali of KeenelandMarket.com joins us on this Monday morning. Happy to see you as always, James.
Good morning.
Well, to steal an old phrase, the chips are down. Intel comes out with earnings tomorrow. Is this the stock to watch for leadership?
Yes, it absolutely is. We saw tech stocks get absolutely routed during Friday's trading session, selling off 2.8% on the day. Now, Intel is an interesting story here because it doesn't really have much direction historically on earnings day. It's sold off 4 times and rallied 4 times over the past 8 quarters. Intel was hit especially hard during Friday's trading session, so I think if it's going to put a bottom in, it's going to have to be on some really good earnings numbers here. And I'm not going to touch any of the other chip stocks until I see what Intel reports.
What do you think's going on here, though? Flextronics had a lot of options players. Texas Instruments, also a big mover on the session. What do you think is behind the scenes?
Right, so we saw a big bid up in broader market implied volatility on Friday, and that's led by traders looking for positions for protection in stocks. And I think that's probably what's happening here in these chip names. Like I said, we're seeing the NASDAQ fall out of bed here, and it really looks like maybe investors are looking for some protection in those names. The call buying could also be driven by short sellers who are also buying upside protection, because we can't really predict when this market is going to rip higher or sell off like it did on Friday. It's been a wild couple of weeks here.
And wild for traders in the VIX pit over at Chicago Board Options Exchange. So what do you see happening here with the VIX?
Right, so we saw a huge move higher in the VIX on Friday, trading at levels that we haven't seen in a long time. And like I said, those bids higher in implied volatility are generally driven by traders coming in and increasing demand for options when they get a little bit worried about what's going to happen in the broader market. It traded as high as 22 on Friday, which is not a panic level number, but it is definitely starting to show us that there is some concerns by the broader market.
Translation, more volatility still to come. Thank you, James.
Thank you.
That's the end of the line for us today. Coming up tomorrow, Apple Pay is on the way this month, but will it be here to stay as hackers threaten financial firms? Find out more about mobile money on Tuesday. From all of us at First Business, have a great kickoff to your week.